Good afternoon, everybody, and welcome to your daily market insight video here on Friday, January 7th, 5 minutes after market close here in Jacksonville, Florida, 4:05 p.m. Eastern time to be exact. And in today's edition of the Big Show, yes, this is Hunter filling in for Don. We're going to look at the damaged 21 over 21, some of the names that have started to break down, some of the names that had sharp breaks. We're really going to go through and look at these. And I think it's going to provide some real clarity as to some of the damage we saw this week, even in some of the last standing leaders. Additionally, we're going to look at the survivors, some of the stocks in those sectors I covered in yesterday's videos, like industrials, oils and gas, financials, banks, etc. We're going to look at some of those that are still holding up. We're not going to just focus on what was bad. We're going to look at the sector strength. We're going to look at some of those leaders that started to wobble, and always, or like we always do, we're going to look at key index levels. So let's get right into it. What just happened? A poor finish to a tough week. Jobs report came in far below expectations this morning, and then key levels of support pierced on the indices. So we're going to get to that in just a moment. Jobs report was roughly 200K versus like a 450K estimate. So a big miss to the downside. But nonetheless, the market was not happy with it. You can see the Qs, small caps down over 1%. The S&P down a little less than 0.5%. The Dow was basically flat, which it's held up better than all the other indices because it is the most defensive of the group. Mid caps down 0.77%, and the G5 continues to lead to the downside as growth continues to get taken to the woodshed, down nearly 2%. So market state stays in a consolidation as of 1/6, yesterday's video. That will change to correction if or when the S&P were to have a harsh break of the 50-day moving average, the Dow were to move, harsh below its 21 and 50. So the S&P and the Dow are still kind of hanging on by a thread. Really, the Qs and small caps look the worst of the bunch. But consolidation staying for the time being, subject to changing very quickly, depending on market action next week. Additionally, we have several trend changes just from yesterday's video, right? So we have gone from neutral to down here on market leaders, as we've seen some of the last standing leaders, NVIDIA, AMD, Tesla, Apple, what have you, start to break down below the 21 crossing back down below through the 50, those types of things. So market leaders now bearish or down. Short term, we are also on down. We've had 3 consecutive closes below the 21 on the S&P. We've had consecutive closes below on all of the major indices, with the exception of the Dow. And then midterm, we also added the small red arrow here as we continue to close under the 50. The Dow is the only one above. If we get a harsh break of that 50 on the S&P, this will probably go to bearish. And if we see the Dow actually participate in the downside, that would probably push this a little quicker too. So that is the trend gauge updates. And before we get into the charts, I do want to highlight this really quick, just to kind of give you an idea of where we were at the beginning of the week or at the end of last week and where we are now. So on Don's last video, his last big show last Friday, we were still in uptrend as of 12/27. The market looked a lot better than it did now. The trend gauge looked much different. We've had some significant changes this week as we've had harsh breaks of the moving averages. We've gone from bullish to bearish here, as you can see, and then bullish to intermediate or neutral, excuse me, on the medium term. So some big changes on the trend gauge and the market state, which is reflective of the market action we saw. So let's get into the charts. But before we do that, let's talk about Revere for a quick second. If you're interested in what we do, who I am, what I'm talking about, what these stocks are, whatever, just shoot me an email. I would be happy to answer any questions you have. If you're interested in what Revere does, what our strategy is, what our investment approach is, you can email me, Dan, Don, Tim, Merrill, or Alex at revereasset.com as well. So let's get into it. S&P, like I said, flirting with the 50, basically closed right on it to slightly below it. So not a harsh break of the 50-day moving average for the S&P yet, but it did pierce it. And that is what I mean by key level of support pierced. And you can see the SPY here slightly undercutting the 50-day. We saw the actual SPX index do the same. And I would look at that here with you guys, but the data lags by about 10 minutes because it's an index, or about 20 minutes, excuse me. So it's not going to be as real time. So here we have the SPY. just continuing to angle downward, not able to push through and make a higher high or push through the previous day's high. Just a pretty poor finish to the day and pretty poor action overall. Like I said, we are hanging by a thread here, sitting right on the 50-day with not much looking good down below here. So SPY, the S&P, currently sitting right on the 50-day, about 2.5% or so, maybe, I'd say that's about right, maybe 3% off of all-time highs. QQQ obviously does not look as good as the S&P, well below the 50. And we now have the 21 crossing through the 50-day to the downside on the Qs. That is never something that's a positive. We pierced through this 380 level, which was an important level of support that had held quite a few times. And additionally, we closed below the 20-week moving average here on the Qs, something we haven't done all that often since this run started. As you can see, we closed above it actually every single week since the COVID bottom. As you can see here, that is the green line. It's your 20-week moving average, closed right on it here, closed right on it here, closed right on it here. This is actually the first definitive close, I would say, on a weekly basis below the 20-week moving average, which is somewhat important there. You want to pay attention to that. Like I said, broke through this 380 level, maybe a little bit of support here from these previous lows, but this does not look good. Multiple times we've tried to clear this 400 and have been rejected on, you know, 1, 2, 3, 4, 5 times. Kind of, it seems like we tried to stay above 400 and the Qs can just not do it. So now below this 380 level, not a great sign on the Qs. We'll go to the Dow real quick because this one has held up. Not much to say about it other than the fact it's still above 360, still above the 21. If this starts to participate in the downside or starts to get caught up as well, start to see some big time volatility here to the downside, that would be a big time cause for concern. And lastly, IWM, actually two more. IWM doesn't look good, kind of back up into all these moving averages, not able to clear through and back down on more volume than when they tried to come up, which is never good. So a harsh move back down for small caps, back below all of their moving averages again. And then mid caps, kind of a similar story, just ducking down below the 21, the 8, and the 50 there. As you can see, the 200 is right here around the 500 level. So 500, a key area of support for mid caps. IWM is really kind of right at that level. 220 would have been where you want to see it to hold support, and that has turned to resistance. That's not good. So there is your indices, but there's something that's been driving markets that's really important this week. And we talked about it yesterday. I want to look at it today too, because it made a really strong move. And we talked about this on the podcast too. So please tune in because the analysis is far more in depth than what I'm going to give you right now. So TLT down again today, yields were up, right? But this is a very important level for TLT if it can find any type of support. So that's something you want to keep in mind going into next week. If TLT finds support and moves upwards, that means rates will come down, right? Which means TNX will come down. That's what I mean when I refer to rates. So TNX actually broke out today, as you can see, above this 1765 level here. It's a really big move for TNX, but very extended to the upside doesn't mean it can't keep going. But I just want to bring the information here. This has been a very strong move for rates. So with that being said, we kind of closed the week out here with the CPC spiking back up towards 1, finished around 0.9 or so, a little over 0.9 today, which is relatively high, but given the market conditions, pretty normal reaction or normal place for the CPC to be. Fear greed remains at about a 50, and the VIX was actually down today, even though the indices were down. VIX around 18, 19 range. So not really seeing panic fear reflected in the fear greed index, the VIX right now. CPC a little bit more so than those two. CPC got up a little over 1 yesterday, got close to 1 today. So the CPC is a little bit more reflective of fear than those other two indicators. And secondly, the bear case essentially came true. If you watched Don's video last week, bear case was a failed breakout on these indices, and that is more or less what we got on SPY. Failed to really continue higher, just constantly rejected here and heading lower. You can look at QQQ, although it didn't get through these highs, this 408.71 high, a failure to continue higher, failure to hold 400. So That is kind of the bear case Don presented last week, and that is what's happened. So with all that being said, I now want to turn to the damaged 21 over 21 list. So we're going to go through these one by one, and we're going to talk about the ones that are coming off and some of the other potential survivors. We're not going to fully rebuild it, but we are going to highlight some of these survivors. And the reason for that is these stocks that would potentially be replacing it aren't really leaders. These are just survivors or stocks that saw a really sharp move up, really as risk assets came down. So we're going to go through these one by one. DVN, as you can see here, still extended to the upside, looking great. Oil and gas continues to look very strong. A really strong finish today, above average volume, just kind of making a beeline for that 50 handle there on DVN. Tesla coming off of the list, just really volatile action. We know that's commonplace with Tesla, but just nasty 20% pullback here. Really, it happened in 3 days, as you can see here. Harsh bounce off this low of like 1020 back up into the moving averages, and then a rollover and fail. And additionally, the 21 never got back up through the 50-day moving average. It's now curling back over. So Tesla coming off of the list, one of those last market leaders that now does not look so good, starting to wobble. We've seen the Apples and Googles and Teslas and NVIDIAs hold up the market and hold up the indices for quite some time. Now we're starting to see those leaders look a little bit more shaky. Lam Research also coming off the list, has been really strong, had been showing relative strength really kind of up until today, and really kind of what you would expect to happen with the way this played out, right? It did reclaim the 21, but a harsh rejection at the overhead, declining 8, and then a slice back through the 21, now all the way to the 50 pretty much, and retesting the 670 pivot. So LRCX off the list, BRKB, one more time. There we go. BRKB clearly staying on the list. No signs of weakness here. This is phenomenal action as we've seen these value plays start to act a lot better. So BRKB staying on the list. Vulcan Materials staying on the list by just a little bit. It did kind of get close to the 21 today, bounced off of it just a tad. So VMC gets to stay. PanW does not, along with the rest of cybersecurity for the most part, not acting the greatest, starting to roll over a little bit, break moving averages, that type of thing. So although PanW was looking like it was going to reclaim the 21 EMA today, it ended up finishing at the bottom of the range. So PanW off the list. O'Reilly's gets to, we're going to leave O'Reilly's on, even though it is just a hair below the 21. When I looked at it 10 minutes prior to the close, it was above it. But O'Reilly's, for all intents and purposes, right on the 21, just a small amount below. ICE, Intercontinental Exchange, this one is coming off. Harsh break here, as you can see, early this week, and not able to get back above. So I know we're going through these here, but this is, as you can tell, this is not just specific to one sector. I mean, we've got financial services here, ICE starting to break down, semiconductors, automakers with Tesla, cybersecurity, REITs, Cube, another member of the last week's 21 over 21 with a nasty, nasty break of the moving averages outside of its characteristics for volatility by a long shot. We saw the same thing happen with another member of the 21 over 21 we're going to get to here in just a second. TOL, builders just getting absolutely slapped with this move in rates. The market obviously thinks the move up in rates is bad for builders, reflected in the price here. Just a nasty breakdown on TOL coming off the list. NTR, another really, really sharp move down this week. I mean, this is a recurring theme. I'm not sure if you're seeing it, but some really wide, loose candles to the downside on a lot of these names that have really been leading stocks. So NTR, nasty move down, now below the 50-day, off the list. Let's see here. MU stays on the list, still above the 21. AMT was that other REIT I mentioned that had some way outside of its normal characteristics for volatility, moves to the downside. I mean, this was 3 days really of exceptional volatility here on AMT, gap below all the major moving averages here. Off the list. Cost also coming off the list. Costco, one of those defensive, the staples names that had been hanging in there so well, breaking the 21, starting to roll over. You see the 21 starting to hook down. CIEN, a telecom company that was just one of the best looking charts out there up until this week, breaking the 21 by just a tiny bit at the end of the day here, just a poor close all around, but not able to stay above the 8. The 8's operating as resistance, as you can see here. So like I said, a lot of turnover, a lot of damage in this list. And it's not just one sector. This is MRBL, a semiconductor. Below the 21, it's turned into resistance for it as well. ANET, also below the 21, just a harsh move, 150 to 130 over the course of the last 2 weeks. AAPL, one of the last liquid leaders that was hanging in there so well. You know, this was acting great while pretty much everything else was not. And now we start to see it close below the 21, not get back above it for the first time in a long time, which is really Apple and Tesla, maybe two of the most important ones to watch moving forward, and they certainly are. But Apple with its second close below the 21 off the list. PSTG in the same space as Micron, but I mean, just a really nice move up here above 30, above these previous highs, and now coming right back to test them in a really quick fashion. So PSTG off the list. Even BLDR had some weakness this week, as you can see, and closed below the 21 by a decent amount. BLDR off the list, and Nucor kind of in the same boat with O'Reilly, really kind of just a teeny little bit below, like 20, 30 cents, but just still not great action. So really, there's not a ton, aside from Berkshire, DVN, Vulcans, you know, a lot of the names in there have had really, really hard pullbacks. And so I talked about yesterday some of the leading stocks in the leading sectors that are out there, names that are trying to still hold on. But what you've got to be cautious about is the health of the market and the backdrop. And right now it's not great. But some of the names that are trying to recapture leadership, repair their charts, show some strength. John Deere, I talked about this yesterday. Raytheon, these defensive names, these cheaper companies. It's your healthcare or your financials, your banks, your oils, your defensives, your staples, utilities, and then your industrials is where we've seen strength, which is really not what you want to see as a growth investor. But nonetheless, those are the places to look. Companies like HUN, I talked about this today on the podcast. Companies like SBNY, I know we talked about this one yesterday, Signature Bank. These are where the money is flowing, and these are what looks good. So I want to make sure we highlight those, and I want to make sure I highlight the fact that some of these last standing leaders are starting to wobble a little bit, right? Tesla, Apple, right? We've looked at these charts. We've talked about this in exhaustion. Microsoft looks much worse than Apple, actually, pretty significantly worse. If it'll load for you guys there, I know it is. And that pretty much wraps up the 21 over 21. I do want to add this in, as I meant to cover this earlier in the video. We did hedge our SSO position a little further today. We were only in SSO coming into today. We are now net long, slightly under 40% of the S&P. So net long 38% S&P. So we did hedge a little bit more coming into today for an array of reasons, but the slice below the 50, stochastic rollover, to name a few. So we are hedged on our SSO position, not entirely, just slightly under 40% long going into the weekend. But that is going to wrap up the video. I know that's a lot of information, a lot of stocks, a lot of charts, but I hope it's valuable. If you have any questions about anything I covered, please just send me an email and I will happily respond to you all. So enjoy your weekend. Hopefully, if you watch the podcast, you enjoy that too. I will see you guys on Monday's video.